Hey guys, Richard K here from Price Action and Income. And in today's video, or let's say this week's video, I would like to take a closer look at gold's price action, where it is in relation to longer term important levels, and also be using some of my market geometry techniques to show you where price is currently lying, what we could be expecting in the near future, as well as giving you a bit of my directional bias towards the end of this video, so please stay tuned towards the end. Also be showing some other interesting correlations between gold and the US dollar Japanese yen, and a view that I have on there which might be a precursor to what I would expect happening with gold. So without further ado, in front of you here I have my gold spot US dollar chart open using TradingView on a weekly time frame. I always like using a larger time frame to just make sure that price is not at important levels, so that I don't trade into levels that might act as support and resistance. It's always a good idea to have these levels in mind, because they can quite often and will quite often act as strong reversal areas, etc., etc. So just quickly to give you a quick view of all these lines that I've drawn on here. On my weekly chart, we're basically looking at where price is in relation to this decline that we've seen when price made an all-time high. Obviously, this is not a futures chart. We're just looking at a spot price where price nearly reached the $1,200 handle and declined into this 30th of November 2015 low. Now, a retracement of that will show you that since this low price came up, he had troubles getting through the 0.382% retracement from this previous downwards move. Nearly made it there in 2018. As you all know, prices collapsed straight down. I'm going to show you another quick price and time relationship between this drop and where it actually ended, which is quite interesting for those that are interested in cycles. And then obviously we've just seen this massive move to the upside now. Price did not have any issue going through the 0.5% or 50% retracement from this previous drop, and it's now lying at the 0.618%, which is the FIB gold ratio, as most traders would call it. And obviously, I'm sure a lot of traders will either be taking profits at these levels, and it is and will be probably a very strong resistance area where price is at the moment. You'll see quickly from this previous high at the end of, when was this? At the 6th of January, price already tested it once, came up. It could probably put that again and move lower again, but it is at a very strong resistance level. In this case, the 0.618 FIB retracement. Now, in the bigger picture, one has to ask oneself, what was this move lower here? And it's really difficult to make sense of these sort of things. And obviously, this is in hindsight, but whatever this was, it did look like an ending diagonal where price ended at this 30th November low in 2015 and start moving higher. So whether we had some sort of correction lower with price now moving to all new time highs, that will just be too early to say from my point of view. My long-term bias is still bullish. I just have to be aware that we are at strong resistance levels and that we could expect a reversal lower, probably just a corrective structure with price then eventually moving higher. But before we get to that in more detail, we just have to try to figure out what is this. Just like this decline, it'll be difficult to say, are we correcting higher or is this the start of a new move higher? And if you are of the opinion that this is some start of a bigger move higher, then we probably had a first wave followed by a second wave, and now we're having this long extended third wave going higher, which I don't think has completed yet. This is why I'm saying we probably moving up here into a third wave completion, followed by a fourth wave down before we get another big move higher, which could eventually extend above these previous all-time highs. Obviously, guys, we have to look at what's happening around the world at the moment with the coronavirus being in the news. And I also do think that the indices in the US are in quite a healthy state. It's just continuously going up and up and up. And I do think at some stage when we get a really bad reversal, whether that started already, but the indices started selling off a little bit last week. Whether that will continue also remains to be seen. But yeah, I think in the long run, gold has the potential to at least the minimum make it up to this $1,700 handle up here, which is also the upper red warning line of an upward sloping pitchfork. You also see that I use this low to these group of lows here in 2018, extended it to this high, and you'll see that price did ticket, went slightly, did the overthrow to the upside of this channel, came down, and it's also perfectly where price crushed the upper channel line and my upper median line using this shift pitchfork over here. And then if you into your Fibonacci extensions, if we are dealing with a higher wave upwards, then if we use this low to that high to this higher low over here and extend that upwards, then you'll also see that price is also at the 1.382% extension, which is a minimum level for a third wave up. If we also count wave-wise from what happened here on the 13th of October, that low that we had looking at a weekly chart, it's not the exact date when the low came in, we already have 1, 2, 3, 4, 5 waves up. Now, we can quite often see, especially in the commodity markets like your copper and your crude oil, gold especially, that you can have extended fifth waves, which are quite normally longer than you would expect, for much longer than what your first wave would be if you take this first swing up. So I do think we still have some upwards potential. Like I said before, probably heading towards the 1700, but I do expect that we'll see some strong profit taking place now. Also, depending on what happens in the world economy at the moment, this trade negotiations with China and all those sort of things, Trump's impeachment. We'll just have to wait and see. But my long-term bias is to the upside. Where's this other swing that I also drew? Let me just show you that. If we do a fib extension from this low to that high, sorry, and bring it back again. Sorry, let me just find that exact low over there. Come on. Then you also see that we at the, where's this now? It is also at the 1.786% extension of this move higher. So there is quite a large confluence of fib levels where prices here right now at the moment. So I do expect probably a correction to appear. But like I said before, my bias is still to the upside. I'll probably do another video in the future if we do get a corrective structure downwards, see if we can spot the end of such a correction and see if there will be any opportunities to go long again. But for me right now, I won't just buy into a market that's lying at these strong resistance levels, especially when you have a confluence of multi in this case fib levels taken from long term and a little bit shorter term periods. Yeah, so it's definitely not a great plan if you're not involved in gold already, you didn't catch any of the bulk of this move, to just simply jump in. But I mean, this is not trading advice. This is really up to you to make your own decisions. Then, like I said before, I just want to quickly show you guys something really interesting. At this stage here is what we call a bull trap. A lot of traders thought, okay, price is going higher, and it will probably break this July 16th high, 2016 high. And what happened, price mucked about a little bit for a while and then collapsed straight downwards. And I do consider this low now something I've been actually looking at for quite a while. I've only noticed this after the fact, but it strengthens my idea of what I'm going to show you now, that low is a very important low. It obviously is now on hindsight since we had this massive move to the upside. But if you quickly bring up a calculator, just use my desktop calculator, and then you'll see that this high here in Jan 2018 was at 1366. Let's punch that into the calculator. And if you minus the range, or trying to find a range from where this low ended, which was at 1160, you'll see that you add a $206 range. All right. So something that's quite important for those guys like trading cycles or know something about Gann's work, whether you like these things or not, it's really up to you. But there is quite a cool relationship between this actual move down. And so remember that now it's 206 days. Remember, we're looking at a weekly chart, so we can always give and take a few days from this. But if you take a measurement tool, in this case, I would like to use a date and price range tool, go from that high to this low over here, then you'll see that that range, as we previously discussed, and this case was 205.78. I just roughly rounded to 206, whichever one you want to use, depends on you, doesn't have to be that accurate. So we had a range of a fall of $205.78, and it took 203 days to complete. Now, that is what some analysts call time and price squaring out. And when you see these occurrences, obviously you would not just jump into a trade. It's difficult to see these things, but they do act as pretty cool confirmation that you're dealing with a very strong low. In this case, we had time and price nearly to the T. There's a good relationship between that drop and how long the drop took. They're almost equal to each other, or 1-to-1 to each other, and that's why it's important to start using this pitchfork as well. So that's a very important low to me. Price then came down and it never looked back. Just be wary, like I mentioned before, we are now at levels that could be, I won't say definitely, but I would not be getting long here. We'd definitely see if we can get some sort of correction. The larger the better. And then see if we can trade back to the upside again. Let me just clear all of these drawings quickly. I'll give a clear chart over there. And then I just want to do a comparison. And how you do that in trading views. This, you click on a compare button. And I want to look at the US dollar Japanese yen. I'll be showing you a little chart later as well, so just bear with me. If we pull that in, then you'll see that traders always say that when you have a weak US dollar Japanese yen, that you'll quite often see an increase in the price of gold. Similar to when this happened, the strengthening US dollar Japanese yen resulted in a weaker gold. And then since then, price has been moving upwards. Now, I've recently also looked at the US dollar Japanese yen, something that I'm looking at with my current subscribers. And what I see also on a longer term time frame for me doesn't look really good for the US dollar Japanese yen. I still think that prices on the US dollar Japanese yen has some potential to move higher. But what I'm currently seeing here in the market is what's called a descending triangle, which could be a very bearish long-term outlook for the US dollar. And obviously, since we look now at the correlation between the US dollar Japanese yen and gold, if the US dollar Japanese yen is going to weaken at some stage and this pattern does eventually work out, then I don't think gold will have any problem reaching at a minimum that level I said before, and who knows, maybe even taking out this all-time high. And that is short, guys. It's just a quick view of what I see in the gold, comparing that to US dollar Japanese yen, what my small forecast is on the US dollar Japanese yen. Obviously, you need a sound strategy to trade these, I won't say predictions, but if price does follow your outlook or your bias, then you need to formulate strategies around that and setups to get into these markets. But that is my bias on gold. I think it's still got quite decent upside potential, but just be careful if you're already in gold that we are laying at pretty strong resistance areas at the moment. And if you guys haven't done so before, then please hit the subscribe button below, and please hit the like button as well, and be notified for any next videos that I would come up with. And just guys, like I said, stay safe in the markets. This is just my view of what's happening in gold at the moment. So I would probably make another movie in the near future or video, sorry, if we see a decline happen in gold and see if we can actually time an entry and see where such a correction might end. And that's it for me today, guys. Thank you very much for listening. Until next time, my name's Richard Kay. Goodbye.